Assalamualaikum to Madam Imawati and all my friends. Thank you, Madam, for giving us a golden opportunity to present about prime of book entry. Before we start our presentation, I want to introduce my group that is Nurhaliza binti Tufa, Muhammad Ibn bin Muhammad Ghazali, and myself, Siti Aisyah binti Rasul. So we will start the presentation with the point given by Nurhaliza.
The first one is purchase journal. A purchases journal is also known as purchase table. It is used to record credit purchases of business inventory only. This means the purchases you have not paid but will pay them for later. The credit purchases of non-current assets cannot be recorded in the purchases journal. It is written out from invoices received by the business. The name of company or supplier from invoices received by business should be recorded and listed in the business purchases journal. There is 5 columns. The first column is to enter the date the transaction took place, a detail or account column to enter the name of suppliers or also known as accounts payable or liabilities, invoice number column to enter the invoice number, and a follow column to enter the name or file number where the purchases journal place, and the last column is the amount that is charged by the supplier to the business. At the end of the month, the business will know the total credit purchases made in that month. The next one is a sales journal. A sales journal is also known as sales table. It is used to record credit sales of business inventory only. The credit sales of non-current assets cannot be recorded in the sales journal. It is to provide the chronological records of all credit sales made in that month, made in the life of a business. Credit sales are transactions where the goods are sold, but we will receive the payment at a later date. The source document for the sales journal are copies of all invoices given to the debtors. The name of company that is customer from invoices issued by the business should be recorded and listed in the business sales journal. There is 5 columns. The first column is to put the date. Second column is the detail or account that is to enter the company or customer's name, that is also known as account receivable. A column for invoice number. A follow column to enter the name or file number where the sales journal place, and the last column is to enter the amount that is charged to the business customers. At the end of the month, the business will know the total credit sales made in that month. Next, I will pass to Aisha.
So let me start my point with general journal. A general journal is known as a general daybook. It is used to record entries for business activities. We will use the general journal when we want to start a business. Other than that, the above the discussed books of prime entries such as opening entries, closing entries, adjusting entries, correction of error. Each transaction a company makes throughout the year is recorded in its accounting system. There are many different journals that are used to track categories of transaction, like the sales journal. All company transactions are recorded in the general journal. So let me see how the table of general journal. Transactions are recorded in all of the various journals in a debit and credit format, and are recorded in order by date, with the earliest entries being recorded first. These entries are called journal entries since they are entries into journal. Each journal entry includes the date, the amount of the debit and credit, the title of the accounts paying debit and credit, and also a short narration of why the journal entry is being recorded. Secondly, I would like to share another book of prime entry, which is cash book. A cash book is accounting records all cash transactions in detail. A cash book is a book of prime entry and can be classified as a special journal. A cash book will detail all cash receipt and payment transactions for a business. Recording transaction through a cash book as opposed to a cash account means it's easier to track and monitor cash balance and easier to identify mistake or error because they provide more detail. So we have two types of cash book. There are a number of different types of cash book that a business can use. The simple is two-column cash book. It is used to record all cash receipt and payment. It has two columns which are cash in hand and cash at bank on both debit and credit side to cash book. This type of cash book is used to record entries without cash discount. Second is three-column cash book. It is used to record all cash receipt and cash payment. It has three columns which are discount allowed, cash in hand and cash at bank on the debit side, and discount receipt, cash in hand, cash at bank on the credit side of the cash book. This type of cash book is used to record entries with cash discount. So I will pass to Daniel.
Okay, return outwards. Return outward is a good which we purchase on credit. If the return back, it is called return outward. Return outward are goods returned by the business to the supplier. The reason for returning the goods could be because they were either defective or did not carry the specification request by the business. For the supplier, this result in the following accounting transaction. Firstly, the source document is involved is the credit note sent by the supplier or the business sent by the supplier. Secondly, is a debit, a reduction in revenue in the amount credit back to the customer. Return outward a good return by the customer to the supplier. Okay, so we can see here the example of return outwards. Okay, return outward have a 5 column that is date, particular reason, that is the detail, credit note, folio and amount. Okay, for the first question, like March 19, goods are returned to Ali RM 10 ringgit, credit note number 007. Okay, for the date column, we need to put a date, like example 1 is March 19. For the detail, we put the Ali and the credit note is 007, folio and also the amount is 10 ringgit. Okay, at the end of month, all transaction is combined to transfer it to return outward account. Okay, so we can see like this. They have two transactions. That is March 19 and 24. At the end of the month is Ali and Kasim account is combined 10 ringgit and 80 ringgit. That is 28 ringgit. Okay, for the return inward is also known as sales return. The amount of return inward or sales return is deducted from the total sales of the business. It is treated as a contra revenue transaction. Return inward hold the debit balance and is placed on the debit side of the trial balance. Return inward are goods returned by a business to the supplier. The reason for returning the good could be because they were either defective or did not carry the specification requested by the business. For the customer, this result in the following accounting transaction. Firstly, a credit note will be issued to customer. The notes are sent out serially numbered, or the business received the debit note from the customer. Return inward do not necessarily result in a reduction of the cost of goods sold, since goods that were returned might not necessarily have been sold to third party during accounting period. Okay, this is example for return outward account. Okay, Return inward also have a 5 column like a return outward. There is date, detail, credit note, folio and amount. Okay, for example, this is March 14. Goods returned by Tom, 50 ringgit, debit note number 211. Okay, the date is, we need to put in the date column is 14. The detail is Tom, which is written inward by Tom, is 50 ringgit. Credit note that put in the credit notes account is 211, and the amount is 50 ringgit. Okay, is it same also with March 23? Goods returned by Tam, RM 20 ringgit, debit note 213. Okay, at the end of the month, all the amount account is combined to transfer it to return inward account. Okay. Okay, this is also an example for return inward journal that have a date, detail, note number, folio and amount. Okay, at the end of the month, it also to transfer all amount to return inward account. Okay, that's all from us to giving instruction about book of prime entry. Okay, thank you very much from all of us, and once again I want to thank you for giving this opportunity to give a note about this book of prime entry. Okay, thank you very much.